Hey everyone, in this video I'm going to cover what Upstart CFO Sanjay Datta thinks about what's going on in the US economy among consumer behavior, saving patterns, employment, and the likes, and why what he says is great news for Upstart stock investors. So let's get right into it. So the first thing that the CFO wants to say more broadly about the US consumer is that they're slowly getting their fiscal house in order. And remember, it was out of order for a while, probably more than a year and a half. And what he thinks is that a lot of the stimulus and what it did to real consumption patterns got people used to an elevated level of spending post stimulus, right? And if you recall, during the earlier stages of the pandemic in 2020, 2021, there was a lot of fiscal stimulus that was pumped into the economy. You had the stimulus checks, you had some business programs on the business side, you had the unemployment boost, right? If you were unemployed, you got your regular unemployment benefits plus a boost, and there was all kinds of other stimulus that was put into the economy that got people used to this elevated level of spending, being able to go out and buy a new TV, a new laptop computer, go out to lunch and dinner whenever they wanted to, and people got used to this elevated level of spending. Well, now it's coming more in line. It's getting more into balance compared to how it was pre-pandemic, right? The balance between what people are earning and what they're consuming, it was out of whack for a long time, right? It caused us to eat through a lot of that savings that was built up from the stimulus, and I think that's the root cause of a lot of problems for banks, right? So coming out of that period where there was a lot of stimulus money, pent up demand in people's bank accounts, right? All that money was being saved up because there was a lot of restrictions. You couldn't go out and buy the things you wanted to buy most of the time. Restaurants were closed. So now that economy's reopened and you had that built up money in your savings accounts, you started to go out and spend a lot of that money more than what you were earning. And since it was more money than you were earning, you were working down that built up savings in your bank account, in your savings accounts. So now it's kind of leveling off where we've worked down a lot of that savings, and now spending patterns are getting more in balance where people are spending closer to what they were making. So another thing the CFO highlights is that the percentage of US adults that are employed, it's been climbing sort of steadily for 6 to 7 months now, and this is driven by better participation rates. Well, yeah, this kind of makes sense, right? As the fear of contracting COVID-19 has fallen, more people are interested in working. Also, as you work down the money you had in your bank account, now you start to be more interested in working because you don't have as much money saved up. You start to see those balances falling. And to tie this all back to why it's good news to Upstart, remember, Upstart makes a lot of loans, right? It's a platform that brings together borrowers and lenders. And if borrowers are in a better position financially, then that makes lenders more interested in lending to them because lenders are not interested to lending to consumers that are leveraged too much, that have poor employment prospects, right? Because lenders are afraid they're not going to get their money back. And a big part of what Upstart does is it brings lenders and borrowers together. And if lenders are not interested in making loans, then the whole business model doesn't work because it requires both sides of that equation to work. For Upstart, it needs lenders and it needs borrowers. And these healthy figures from US consumers can partly explain why Upstart was able to lock in a deal with lenders for billions of dollars of funding to its platform, where they're going to allocate and make more loans on the Upstart platform, because the fears that there was going to be this significant recession where people were going to lose their jobs and not be able to pay back debts, those fears are slowly diminishing. Now, they're still out there, there's still those risks out there, but those risks are diminishing. And with each diminishing rate of that recession, with each quartile, with each percentage change lower, it's an improvement for Upstart because that makes it less risky for lenders on the platform. And so all of this, the healthy consumer, the healthy job market, all of that is good news for Upstart stock, and you can see it in the most recent month or two. Upstart stock is responding and is heading higher, partly because of the healthy consumer trends in the US. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.